Charles, you've seen the fundamentals, you've seen the figures, you've seen everything. What's your take on it?
Well, I wasn't surprised looking at what has happened. Again, I have always been in the forefront that market is very dynamic. And if at any point in time, maybe one trading session, 2, 3, 4, and I see that market is just up, I get a little bit, not too comfortable, because market is dynamic.
Yeah.
Frequent buying and selling, prices must go up and come down. That is the beauty of any stock market anywhere in the world, because it's demand and supply. So, but when investors are always happy when market is up, and I say, okay, if you have not entered when the market starts moving, is it now that you want to enter? So there must be this dynamic. So when we saw the market 4 days up, then of course on Wednesday seeing the market pulling down, I was a little bit comfortable. I already know that it's going to continue that way, because buying and selling, demand and supply, it must fluctuate. And that is the essence of any market. Because at that time when it is coming down, some persons can now enter the market. And that's why I keep saying at any point in time, always have your trading plan. Like I listened to Albro speaking this morning, every stockbroking firm have an investment committee. So individual investors should not look at what these insurance investors are doing, most of them, because they have investment committee. Even me as a trader, I will only be the technical advisor to that committee, or maybe person who executes. There is an investment that will sit down and look and say, okay, trader, this is what and what you want to buy, this is what and what you want to do. After they have, the young chart will have done their analysis. And that's why we train them a lot when it comes to not only fundamental, but also technical analysis. So that by the time you are buying and selling, I'm talking about proprietary trade now.
Okay.
You are taking an informed decision, informed position, because you must make certain returns in your portfolio because of it's even part of the KPI, and all that. So yes, that is how market is supposed to. So most of us, we want to see market go up and come down. And when fundamentals come into the market like this, market will react.
Okay, yeah,
and that's what we have seen. And for me, I think it's still a mixed market, and of course, it's still good. Investors should not have any panic at all. Just have your trading plan, and that's why I keep saying you need to continuously talk to your stockbroker. And I keep telling people this. Some of the sessions I do when it comes to financial therapy, personal finance. When you are sick, you go and see your doctor.
Definitely.
So when you have issues concerning your investment, please speak to a stockbroker or speak to an investment professional. People like Ambuso will guide you as to what are the things you need to do. Understand the basis of the market. It's not every time you allow. In fact, we stockbrokers will take decision for you. Yes, it is the investors that take decisions themselves. We can only guide you and show you some of the
what is happening. Yeah.
You have to take your decision. So for you to play the market very well, you need to have a little understanding, basis of the market.
Charles did mention that there's no perfect time to go into the market. But let's look at some of the stocks that played out, the trading stocks that played out in the market this week. The banking stocks, and also the oil and gas sector, and also the services sector. What do you have to say concerning these trading stocks?
Just like what Mr. Charles just said now, the market, it's a place that will have newcomer and new exit. Come and go, it's free entry and free exit. But the beauty of the market is that for you to make profit in the market, it must not be 100% profit. But if you are have 80% gain and 20% loss, you can do 60-40 or 5 on the winner side. But to do this, you must have confidence and also have knowledge. For you to have the confidence, it means you have knowledge of the market. How the market works is very, very important. As I said, the dynamics of the market. Once you know the dynamics of the market, you're able to position yourself in and out of the market, because every player in the market has a plan to trade. If you train your plan, I meet my target of 15% profit, I'm going. The guy that want to achieve 40 also be in the market. It doesn't concern you because you have met your. But the good thing is that for me, the market, even though it was a mixed market, the beauty is that the market uptrend technically is still very, very much intact. Until pull back and cross what we call a signal line or what we call a T line, we're not start complaining. Good that market are put down for 3 days, but it's a trend line that is up market that it has not crossed down. Once it crossed down, I would say, oh, market is already on a decline. For now, market is on what we call a distribution phase. People are taking profit. But once they cross that line, when I say this is a decline market, then when I say, okay, let me reposition for it. Hold on, that like when a knife is falling, you don't cut the knife until you get to what we call support level. As you get there, at that level now, you'll be coming back to the market to be, especially now that we're at any season. For me, I tell you that this is going to define the market direction. We have seen people reacting to statements and policy change. But now we are seeing the real fundamental of the market, which is what the companies that are listed on the exchange. And that is the difference between equity market and bond market and other fixed income market. Those ones all feed on what? On the fundamental of the economy, on the interest rate. But we in equity, this earnings is what gives us an edge, because price have to feed on earnings. Now that price earnings are coming, we will doing analysis to make sure that these earnings, market move in that direction. But because the earnings have come so far are missed numbers, I won't tell you, these numbers are below what market was expecting. But there are some few industries and individual companies that have done well. For that, for market to slow down. I'm not sure the market is going to, because earnings that hit the market are below expectation. That's why they are missed. But now, what is it that as an investor or trader, which sector or industry has performed well? Which I would say that the service companies or sector of the market have done excellently well. Look at the result that came from FBN Holding. Look at the one that came from ETI, the one that came from Ruma Bank, and also go to other service sector like SACO. We have seen the one from NACO. These numbers, they are sweet numbers that, as an investor, you be assured that this earnings will continue in this trending position. But for those companies that see that the policy of the government, also the policy of the government, that the economy fundamental is changing, there are some industries that already shaking. As an investor, you don't need to hold position in that sector that are seeking, because tomorrow they also come up. But for now that the government policy or the policy of the government is not favoring them, I'll tell you the change of the exchange rate automatically affected our first sector. I won't lie, because even though we are importing anything in Nigeria, for either your raw material machine, you're going to pay from your nose. And that's why we are importing inflation to the economy. But companies that have done backward integration, they are not importing anything. They're going to make money in the economy. That's why when the result of NASCOM hit the market, everybody was happy. This NASCOM, they're into agriculture, they're into food, around Nigeria here. But these are important, like Unilever. When people are saying that Unilever result was good, I was laughing. Unilever is all that. Look at their Q2 number. From April to June, it's already in red because they have a decline. But because they've done well in Q1, being a 6 months result, it's now level it to be good. If they are not performing well, for Q3, Unilever will be in red. For me, we have to be very careful. Let investors understand how to look at these numbers. But I believe that investors should not panic. All you do, we will call portfolio reshuffling or rebalancing. Move to that industry, that company, that sector that you are seeing that numbers are looking good, that trend will be sustained in Q3 and Q4. That is where it should be.
How best can investors position themselves for maximum profits taking at the NGX?
Thank you very much. It's very easy and straightforward.
Yes.
Very easy and straightforward.
Yes.
We talk about market dynamism. Market will always change over time. But how do you position yourself? If you have confidence in the market, you have knowledge of the market, you position yourself. Those are the two ingredients with which you can position yourself very well in the market. You have a deep knowledge of the market. You understand the market dynamism. You understand the rebalances, what happens in the market. Then you position yourself to say, this is the way to go. I am happy the two analysts that have spoken so far, they talk about rebalancing, market dynamic, all the things that happened. Last week, the market was good. Earlier in the week, the market went good. All of a sudden, on Wednesday, it's just market dynamism. People need to go out, free exit. Others need to go, some need to come in. That is the way market operates. So for you to position yourself in the market properly, you need the understanding of the market. You need need knowledge of the market. You should be able to know where to go, where to put your money. Of course, you are going to put your money in where your mouth is. That is for a typical investor. There is no investor that wants to go and put his mouth on where his mouth is not. So anytime a good investor will only put money in where his mouth is. That's where the market will go.
We've seen so much growth and momentum in the financial service sector, and the banking stocks are not declining with all the corporate earnings that we're seeing. What would you say are the fundamentals responsible for this growth?
Well, it's very obvious. We are coming from the less cash that in the Q1, when there is no cash even to do the transaction. Now you are moving into the cash economy, where the cash is available and transactions are going on. So definitely sure the Q2 will surpass Q1 in all the results so far we have seen. And the beauty of it, first fundamentally the turnover. If there are any growth in the turnover across the board, most of the company results so far so good, they shows improvement in the turnover, and most of them in the double digit. What most of the investors are not aware is those companies that are multinational by dimension. They have foreign exchange loan. And when they have foreign exchange loan, because of the change into single exchange rate, they have to declare losses. That's what we witness in Unilever, that's what we witness in Cadbury. So most of the multinationals that have the foreign loan will definitely declare loss despite the fact there is improvement in the turnover. But the local companies that have local loan, it doesn't affect them. We have seen the wonderful of livestock. We have seen a wonderful result by Nescon. Nescon have not been at the current price for the last 10 years.
Yes.
But it may even go higher. And that's what we are likely to expect to see in most of those companies that have local loan without foreign loan. But generally, I can tell you so far so good. The investors have nothing to worry because we have seen the result of Transcorp. It went up and came down and now start moving up because the result proved beyond the reasonable doubt. My advice to the investor, if you want multiple times, you have to go to the small caps and penny stock. Because these are the stocks that give you 100%, 200%, 1000%.